St. VITA.
Oh,
It should be fine, I think. All right, thanks.
yeah, there's two of us, but I'm hosting it. Nice to see you, Damien.
Thanks.
Okay, it's up to you, Jerry. Take it away.
Okay, very good. So good morning, everyone. This is Jerry Muir, and today we are going to go through our VITA session number 3. And as a reminder, we do have a couple more, and the next one will be in 2 weeks because of the Thanksgiving holiday. All right, let's run to our objectives. We will talk about reverse mortgages, and then you'll hear me use the term information returns throughout our training. And there are many different types of information returns. That's something that you'll bump into at the VITA site. Your clients will come up to you. They'll certainly fill out the 13614C, the intake and interview form, and then they'll have information returns, typically W-2s, maybe some 1099s. And those information returns generally will tell the story that you need. Sometimes you're going to have to ask additional questions, but generally they'll have the information. We also will talk about the various credits, child tax credit. This is something that it's written up in your publication 4012. It's for lack of a better term, it's automatic as you enter data into the software. The child independent care credit, we're going to talk about that. That's the one typically where you're going to see a minor child, you're dropping them off at some type of daycare, and you're paying for that daycare. You got to go to work, and that could be a individual or it could be a small company. We'll talk about the earned income tax credit. This is the largest credit you'll probably see in the VITA program. It's a refundable credit, and it's a big deal for low and moderate income taxpayers if they qualify. And then another credit you're going to see again and again is the American Opportunity Tax Credit. That is one of those educational benefits. And the unique thing about the American Opportunity Tax Credit, it has both a refundable and a non-refundable component. And when you hear the term non-refundable, that simply means it's a dollar for dollar reduction of the tax. And then the lifetime learning credit, you'll see a lot of that, and that's typically you're not going to have both on the same individual. The lifetime learning credit usually is for individuals who've gotten out of college, maybe they're going less than half time, things like that. We'll talk about it. And then we'll talk about some other income topics, and that's something you'll see in the VITA program again and again. There are many different types of other income that individuals have that are within scope. And then what we'll do is we'll go ahead and address that in the software. And then we'll talk about the practice lab. We're going to go through an exercise, the Gene Arista exercise. And if you haven't logged in to Link and Learn, things have changed, I think for the better. It's been redesigned, different colors, more colors, and we'll show you a little bit about that this morning. Like the other sessions, we'll go to no later till noon, and then usually we'll break approximately on the hour. Okay, I think it's important, and we do know that there are a number of documents that we will touch again and again with our VITA clients. And the big one is, of course, the Volunteer Resource Guide. And that really is one of your go-to documents. It's actually put together specifically for VITA, and it's updated every year. It's a big deal. It's hopefully you picked up the document from the church. If not, then of course it's available online. Now, one thing about the 4012, it has information pertaining to out of scope, and that's something we visit again and again with our clients. Sometimes clients will come in and they'll say, "Why can't you do this for me?" And the answer is very simple. It's typically out of scope. Sometimes the taxpayers will have insufficient documents with them. So they'll come in and they'll expect a return to be completed. And we tell them, we want to help you, but you got to have all your documents. And a lot of times, like I say, taxpayers will have information that's out of scope, which means we can't help them. And then, as I mentioned before, when they go, well, who can? Well, you have many options. One option is do it yourself, or you can go out in town. We're not going to recommend a practitioner, but you can find a tax practitioner out in town. And there are thousands of them. Just in Orange, we live in Orange County. I think most of us here are from Orange County, and there are literally hundreds and hundreds of professional tax preparers in Orange County. And all you got to do is just go on the internet, and there's different types. And we talked about them. You've got CPAs, you've got enrolled agents, you got members of CTEC, California Tax Education Council. So again, just a lot of folks out there if someone is coming to the site and they're out of scope. Another document we talked about, and if you haven't visited it, you definitely want to make sure you reference it. That's at publication 17 at the very top of the screen, and that is revised every year. The last time I looked, it's not available in a hard copy format. I think the last time I did look, I think the IRS was charging people for the hard copy format. So again, all of these are available online for free, and you can access them. Go to the IRS website. And then also mentioned 334, that kind of tells a small business owner everything they need to know about reporting income, reporting expenses, and then there's certain credits. And there's also information in the 334 pertaining to record keeping. And that's something that we see in the VITA program. I see as a tax guy on the outside. A lot of individuals have inadequate or incomplete records. And so you do what you can in the VITA program, but at the end of the day, sometimes you just can't prepare a return unless you have all the necessary documents. And then you can see there's also some publications dealing with the child and dependent care credit. That's something you'll see a lot in the VITA program. And then, as I mentioned, I think the last two times, and I'll probably mention it each and every time we meet, the IRS publication 525 talks about taxable and non-taxable income. And you typically, if you can't find the answer in the 4012, you'll typically find the answer in the 525. And again, just a helpful document or publication talking about what's taxable and what's non-taxable, especially for individuals who come into the VITA site and they say that they've won some type of court award. So for example, my son, he won a court award. He was part of a class action litigation, and I'm sure there were thousands and thousands of individuals involved, and his check was $100. And so he came to me, he goes, "Hey, Dad, is this something that is taxable?" I said, "Well, tell me what it's all about." And so we did a little reading, and I said, "Sure, these are considered back wages, and that is a taxable event. So you report that on your tax return." And then a couple other things. If you are new or newer, hopefully you've had an opportunity to review some of these publications, certainly the 4012, and then hopefully jump into the link and learn. But again, if you're newer, it's anytime that you're ready to take a test or a certification, you have to go through some type of instruction, whether it's online, face-to-face, or do it yourself, where you're sitting down with a document and reading it, preparing for that certification. And of course, when we're talking about Link and Learn, the first certification is that Voluntary Standards of Conduct, essentially an ethics test. It's very short. In fact, I took one recently, and I think it took me all of maybe 7 or 8 minutes to complete. But again, the 4961 is your reference document that you can refer to, so you can prepare yourself for that particular certification. And then the intake and interview. You'll be spending a lot of time looking at that intake and interview sheet. Essentially, it's a lead sheet. And the 5101, that publication talks about the lead sheet. And that intake and interview sheet has been completely revised and reformatted for tax year 2024. So if you are a returning volunteer, there's a lot of changes, and I think they're for the better. And then, of course, if you are a new or newer volunteer, that intake sheet is something that every taxpayer will complete. And then what you do as a tax preparer, you'll perfect it, and then you'll use that along with those information returns, and then sometimes oral testimony from the taxpayer to complete the return. We talked about continuing education credits. If you are a tax professional, typically in the VITA program, the folks that you'll see who are helping out as a volunteer will be CPAs, you'll see some folks from the California Tax Education Council, and you'll see enrolled agents. That's typically what you'll see. And what they're doing, they're helping out. They're not getting paid. They're volunteers, but they're able to earn continuing education credits. And so that 5362 is your go-to document. And then, of course, the test and retest, the 6744. I think the takeaway there for that document is before you take the certifications, you're going to do it your way. I'm going to do it my way. This is the way I think a lot of people do it. This is how I do it. I sit down with the 6744. I read the question that is posed in the test or the certification, and then I will typically look at the answers. A lot of these I know off the top of my head, but I'll look at the answers in the publication 4012. I'll go ahead and jot down the answer in the 6744. And then when I sit down for the electronic certification, I simply plug in all the information, hit submit, and typically I pass. But again, that's one way to do it. If you go right to the certification, some people do that. But I think using the 6744 will benefit you. And again, that's what I do. Okay, other things that you'll reference and you'll see certainly when you generate a PDF document, and that's what you'll do as a preparer. You'll generate a PDF document. The return will be printed and in a hard copy format. And then what happens is the taxpayer will leave the VITA site with a hard copy courtesy return, if you will, because we e-file most returns. And so they walk away with that hard copy return basically for their records. And so when you're talking about the return, obviously the 1040 is your base document. And then you'll have schedule 1, 2, and 3, and then maybe some other schedules, the A, which is the itemized deductions that we talked about, the B, and that's going to be interest and dividend. The C would be a sole proprietor. The D would be capital gains and losses. We don't see the schedule E in the VITA program at St. Killian's because that's for military certification. Once you've certified on the military module, then the schedule E is something we can assist individuals with. The 1099-K, a lot of people get excited about that. I don't. It simply means that the IRS has changed their mind a number of times. The 1099-K is simply an information return. And when people come to the VITA site, whether it's St. Killian's or my VITA site, and they put a bunch of pieces of paper in my face, what I do is I run through them, and then I'll ask them, hey, what's this for? And then sometimes they'll say, well, I was involved in this particular activity, and the entity issued a 1099-K. Okay. And does the dollar amount correspond to what you received? Yes, it did. Okay, then we're going to find a place on the return to enter that. It could be on the Schedule C. It could be other income. And I think it begs the question when people give you pieces of paper and you're looking at it, sometimes you could be the smartest person in the world. You could be an enrolled agent. You could be an attorney. You could be a rocket scientist. You got to ask questions of your client and say, what does this mean? And I do that all the time. I've literally, in my practice, somebody will give me a document, I read it, and I think I speak pretty good English. English is not my first language, but I think I do a pretty good job. And I ask people, what is this? What does it mean? And that's okay. Another information return you're going to see a lot of is the 1099 MISC, miscellaneous income, for various things. And again, when they give you that document, it's okay to say, hey, what's this for? Because you want to make sure you enter the income on the right tab or in the right tab in the software. Another one we do see a lot of is the 1099 NEC, and that's that non-employee compensation. And so, for example, I think the last season I saw a lot of those when individuals were engaged in some type of delivery service. I think there's food delivery service like DoorDash. I think they're still around. Uber Eats, things like that. So you'll see individuals who have a information return. And again, it begs the question, okay, what do you do? And for the 1099 NEC, typically that's going to be on the Schedule C as in Charlie, and that would be a sole proprietor. And then the volunteer standards of conduct, this is built into Lincoln Learn. And so when you certify, what happens is, of course, you've registered. And then when you certify, the 13615 will be automatically generated, and you'll provide that to your site coordinator. And that's basically your contract, if you will. And it has your levels of certification. And I always tell people when you're in the VITA program, I always walk around with a copy, usually two copies of my 13615, because when I go to a site and I'm volunteering, the first question your site coordinator will ask you is, do you have your standard of conducts agreement? And then you have a copy of some type of identification. And then with that, that's your permission, if you will, to work at the site. But it is important, if you're going to work at another site, you want to contact the site coordinator and say, hey, I'd like to work at your site, and confirming obviously dates, times, and locations. And then that way you show up at the site and they're expecting you. Okay, some other references. We talked about Section 61. We're not going to make you tax experts, but what happens is 61 talks about, it's part of the tax law, it talks about definition of gross income. And so the way it's defined is everything is included in gross income unless otherwise excluded. And so a lot of times you'll be talking to a VITA client and they'll say, well, this information right here, this is not a taxable event. And so we'll ask them, well, what is it? And if they go, well, for example, it's a loan. Okay, well, then that's an example of an exception. Loans are not included in gross income. But a lot of times taxpayers will be misinformed. In fact, I was talking to a guy, one of these funny stories I bumped into. He's a young man. He works overseas. His father is a professional tax preparer. His grandfather is a professional tax preparer, and they've been in the business for many years. And the grandson was misinformed on a particular type of income. And so I gave him the answer, and he came back. He goes, "Well, I'm still wishy-washy. I'm not sure how this works." I'm thinking, all right, then we're going to give you the chapter and verse, if you will, for this particular topic. And so that's what I did. But again, you'll see this again and again. People will come to the site and say, "This is the information I have. This is the income I have," and it's up to you. And you're going to be surrounded with a lot of great people, a lot of smart people, a lot of experienced people. And then you got that publication 4012, and you'll be able to find the answer. And that's typically not an issue. You'll be able to find the answer whether something is taxable or it's not taxable. The 1099K, again, a lot of people get excited about it. I don't. I know that the 1099K is an information return. I also know that the IRS changes its mind again and again and again. But what we need to remember when people come to the VITA site with an information return, it's going to have information pertaining typically to income, and we're going to determine whether or not that's taxable or non-taxable, and then where in the software do you go? And with the 1099K, there's a couple of different places that you would go. But again, that's an information return, and we're not excited about the IRS changing their mind about what they call implementation of a particular section of the tax law. And then another thing you'll see a lot of is children, obviously. We've got a lot of VITA clients. They've got young children. And typically what they'll do, they'll drop their kids off at daycare. It could be an individual. It could be a company. And then what happens is mom or dad goes to work. And then at the end of the day, they pick up their kids. So they're paying someone to watch their kids. And of course, there is a federal tax credit. We'll focus on the federal one today. There's a federal tax credit. And all you have to do is you just have to obtain information regarding the caregiver. And then, of course, the amount that you paid, and you're able to enter that data into the software. And then the taxpayer ends up with a credit, which is a good thing. And that credit is a non-refundable credit. And so again, when you hear the term non-refundable, it is a dollar for dollar reduction of the tax, or another term I like to use, it gobbles up any tax that's been assessed on their return. And so that's a good thing for the taxpayer.
Bob?
I heard a Bob. This is Jerry. Okay. All right. Other information, we're going to talk about the earned income credit today. When you hear the term earned income credit or earned income tax credit, that is a refundable credit. And a lot of individuals get it because they have earned income, which is defined as wages, W-2 wages, or perhaps maybe they're self-employed. Earned income tax credit doesn't pertain if you have what is called portfolio income or unearned income, and that would be things like dividends and interest. And then I'll kind of pause here. This is important. If you got your pens and papers ready, you want to make note of this. This item, this volunteer tax alert, you'll see these come out during the season. And what happens is your site coordinator will be privy to that information and then share it with you. And so the first one that came out is this volunteer tax alert pertaining to that VITA test retest document that we talked about. So there are certain changes, and we'll talk about that before we leave the call today. But again, this is the first one that came out. So a few changes that you want to make, pending changes to the 6744. And then we will talk about the FTB, not today. We talk about the FTB Franchise Tax Board next 2 weeks from now, and we'll get into the Form 540. And then, as I mentioned, I think it was the first week, state of California has what is called health coverage. And so if you're a resident in California and you're filing a tax return, you're required to either have health insurance or an exemption. And if you don't, then you may have to pay a penalty. And that's on the state side of the house. The federal penalty no longer exists. And the penalty is called the individual share responsibility penalty. And that's calculated automatically. All right, and then we did talk about reverse mortgages last year. We'll talk about the same thing this year. And that URL down there is from the Federal Trade Commission discussing the details of reverse mortgages. You may see that from time to time with certain seniors. Okay, I'm going to hesitate and see if, Sean, if anybody has a question or something in the chat.
No, the only questions that were in the chat was before the recording started, somebody asked about if every client had to fill out the intake interview form, and the answer to that is yes.
You do. You want to make sure that the 13614C is filled out. That's the English version. There are other versions depending on languages, but yes, the taxpayer fills it out. The VITA staff then will perfect it because sometimes you're going to have a go back and forth with questions, and then that document, along with the information return and the oral testimony, then is used to prepare a return. And when I use the term oral testimony, it simply means people are providing information to you verbally. That's what that means.
Oh, so now there's a new thing popping up here, and maybe I'll unmute or ask Nancy to unmute herself because she said including volunteers. I'm not sure I understand that.
What that means is that volunteers can have their taxes done for free also, but they also need to fill out that form before they turn it in for somebody to review it at the site.
Yeah,
that's true. Yeah, if you're a VITA volunteer, you can get your return done at the VITA site. And yes, you would go through the process where, like Nancy said, you'd fill out that intake and interview sheet. You'd have your information returns, and then you would have your return prepared by another volunteer. And then, of course, the return would be quality reviewed by yet another volunteer.
all right. And then there's another question from Alicia. She's saying, well, where is that cited? And that would be in the 4012 volunteer handbook.
Yeah, when you say where's that cited, what's that?
The requirement to have the 13614 filled out.
Oh yeah, you can spend weeks and weeks in reading about the VITA program. It's peppered throughout the VITA documents to include the website for Link and Learn, the publication 4012, the Internal Revenue Manual. You got it. It's all over. Okay. Anything else, Sean, or should we march on?
So Alicia is saying the 13614 FS, but it's 13614C. I don't know what this FS is.
Yeah, the 13614C, that is the animal that you'll see at the VITA site. And if you do have someone who speaks another language, sometimes you might have the Spanish version of the intake and interview, or maybe the Mandarin Chinese. I think they have one in Tagalog, but there's different languages. But typically, you'll see the 13614C.
Yeah, and then to be specific on where it's required, if you go on the publication 4012 on page B-6, Bravo 6, is where it tells you that you have to fill that out.
Yeah, that's something that you do. And then another thing to remember when you're at the VITA site, sometimes, and St. Killian's is one of these sites that will have what is called a local sheet. So they fill out the 13614C, the intake and interview sheet, and then there'll be a another sheet, a local sheet. So you do see that at VITA sites from time to time. And then Sean, I don't know if the local sheet has been published yet for St. Killian's for this coming season.
I haven't seen it yet, Jerry. We're usually wait until after the franchise tax board training because most of our local questions have to do with California tax law.
Okay. All right. Okay. And anything else?
I do not see anything else. That's it.
All right. Okay, then I think we left off here. Okay, so once again, the changes to the volunteer assisters test and retest, that's something we're going to show you, and that's probably the first thing you want to make note of. All right, let's get into reverse mortgages. Well, I stand corrected. Let's talk about our team. There's no changes to this unless Sean or Fred is aware of a change, but this is your cast of characters, if you will, your laundry list of people who are involved in the St. Killian's VITA. And so I don't think we have any changes. And all of these individuals, I think I've met all of these individuals in some form or fashion. They're all experienced. They all been around for at least a couple seasons, if not more. And so you have a lot of people at the VITA site who've got experience in administration, in IT, and taxation. So you're going to be surrounded by a bunch of people who know what they're doing. Okay, and so if you are newer, or for that matter, if you come back from last year and you were a volunteer last year, things have changed. And so the Link and Learn Taxes, there's a URL, as you can see right there. And Sean, I'm gonna see if I can bounce to that site. If not, I've got another page up. But before I go there, this is how you get to your certification. Certification equals test, test equals certification. And so what you have on the Link and Learn website, you have reading material to prepare yourself for the certification. And then once you read the material or read the executive summary, whatever you do, then you're prepared to go to the certification. And most certifications, when you're talking about the basic module and the advanced module, depends on your level of tax experience. It can take, I think it usually takes me anywhere from maybe 10 to 15 minutes to knock out the basic or the advanced. If you're newer, it might take you an hour and a half or a couple hours to do that. But there's always reading material, and you've got that 4012 to look up the answers. And then, of course, when they ask for an answer based on the preparation of a tax return, then you go to the practice lab, you have a scenario, you have a fact pattern, you enter the data, you generate a return, and then you're able to take the answers off that return. So for 2024, tax year 2024, it has been posted to Link and Learn. It's a work in progress. It's not perfect, but it's there. And as of this morning at about, I think about 8 o'clock, the state of California was not part of the 2024 Link and Learn. So again, it's a work in progress, and that most likely will be posted, I'm thinking probably within a week or so. Again, brand new look if you are a returning volunteer. And if you are a returning volunteer, if you look at that item that says users will not be able to use their old username and password. So that means you got to log in with the email address that you used last year, and then you'll be directed to change your password, and then you'll be good to go as far as entering the Link and Learn and certifying. If you are new to VITA, again, that Link and Learn certification is where you're going to go for reference material, reading material, and then certification. Okay, Sean, we're going to try it, see if it works. If not, I'm going to go to plan B. Let's see if I can open up the new Link and Learn look. So let me know if you can see the landing page.
But we still see your PowerPoint. So
All right, we're going to go to
ha-
option B then. So hold on a second. All right, Sean, can you see anything now?
see the first page of your PowerPoint.
Oh, let me try this. Hold on a second. All right, this might be it. How about that now?
It's changing. There you go.
Okay, so again, this is the new look, if you will. It's been new bells and whistles, new colors, new font, all of that. And so if you are a returning volunteer, what you would do is you would start on that tab that says Start Learning, and it's going to have, again, reference material. It's going to drill you down to the certification. And of course, if you are brand new, you're going to have to register and you just follow the prompts. But here's a couple things where it says quick links. Your Link and Learn tax lessons. And I'm the first to acknowledge if you're new to the tax world, it can be, I think it can be a little intimidating. I think it can be. There's a lot of material. And so there are lessons that you would review. And of course, that Pub 4012 is where you're going to go to for probably most, if not all, of your answers when you take the certification. There's a training guide. I've used it in the past. I don't use it right now, but I've used it in the past. And then this is something that you'll use again and again. It's the practice lab. And when you click on the practice lab, what that is that's going to take you to the IRS software, which is a TaxSlayer Pro platform. And it's a very easy to use. It's user friendly. I use TaxSlayer Pro in my tax practice, and you'll be very comfortable with that. And as I tell the students in my class, I teach at a college, and I tell them once you've prepared about 5 to 10 returns, you're going to get real comfortable with the software. And then the good thing about the practice lab, it's a place for you to practice. If you goof up, you goof up. There's no way you can accidentally e-file the return with the IRS because the practice lab is not hooked up to that big computer in the sky. If you are a professional, there are professionals out there. I think last year, if I remember, I think there were a couple, 3 or 4, and you want to get continuing education credits, then you would obviously you'd have to certify. Some individuals teach, and then you're preparing returns. And then what happens is you're going to share that information with your site coordinator, and eventually it's going to bubble up to the IRS, and you're going to get continuing education credits for your involvement in VITA. Let's see. Sean, did something pop up?
The fact sheet for continuing education.
All right, there we go. And so let me just I'm not going to spend a lot of time on this because we don't have a lot of professionals in the VITA program. But if you are a professional, you know that you have to maintain your credentials, and that means you've got to get continuing education credit. And so you can see here, there's a laundry list of professionals down here. And typically you'll bump into folks who are members of the California Tax Education Council. And what that means in California, if you are a professional tax preparer, you have to either be credentialed or you have to register with CTEC. And if you don't, then what happens is CTEC will send you a letter. And then if you ignore them, they'll eventually start essentially fining you, and you'll be on the hook for some money. But most of our folks at the VITA site, for example, I got a VITA site at Coastline College. I have some enrolled agents. I've got some CPAs. I don't have any attorneys, and then I have a number of CTEC folks that are part of the VITA program. And so again, just a way to get continuing education credits. And then you can see here the laundry list. You can see where individuals who who are professionals, they have to provide certain information. If you're not a professional, you don't need to worry about this. If you want to become a professional tax preparer, it's like any line of work. You have to go through a certain amount of training. Experience, obviously, it's a big thing. It takes a while. And as I've mentioned before, there are many types of professions where you can simply wake up in the morning and by the end of the day, you can be certified. I don't know if being a tax professional is one of those, but you can be a member of CTEC very quickly. You can sign up, take the test, provide all the information to CTEC, and you can be ready to go in probably less than a week. But like any line of work, you have to get depth and breadth of knowledge. Okay, I think that's about it. That's all I need to talk about there. Let me go back to where I was. And Sean, you're my beach master, so tell me if you can see the
Yeah, we're on the landing screen for Lincoln Learn.
Okay, great. Okay, so we're going to go to start learning here and see if I can navigate through this. Okay, and so if you are new to VITA, all you have to do is create a new account. So let me click on that, and it's going to ask you certain information. It's going to ask you information pertaining to your name, your address, and some people get really shy about providing their address. And so whatever address you want to use, school, work, home, whatever. What is happening here is your IRS contractor is collecting data for the IRS. And so you want to go ahead and enter that information to create a new account. Once you create a new account, then you can log in. And let's see. Okay, I'm going to log in, Sean, and we'll see what happens. Okay, when you log in, you're going to come to this particular screen, and this is the certification. So you want to take the certification test. This is where you start. And again, if you're brand new to VITA, you want to make sure you have some type of reading or reference material. Do not take these tests cold. If you take them cold, most likely you're going to fail them. I've actually had internal revenue agents trying to take the basic and the advanced certification cold. And I told them, don't do it. And sure enough, they did, and they failed. You've got to be able to have reference material, and you've got to read and study before you take a test, just like any test. But let's go into the certification test. And Sean, again, tell me if you can see the certifications, the colors.
Yeah, I can see it. I like this new website.
Yeah, it's different, but anyway, it answers the mail, as we say. And so we've talked about the basic certification, and I believe, and Sean, keep me honest here, I think at the church, if an individual certifies at the basic level, this is acceptable. We don't require individuals to certify at the advanced level.
Yeah, so at the church, since we have so many volunteers, we have roles for people who are just screeners and we won't require advanced for everyone. Obviously, we encourage you to eventually get to that level. There's a lot more flexibility if everyone has the advanced qual, but it's a lot harder to get through the advanced tests than the basic tests. So.
Yeah, and I think it's important. I've mentioned this many times before, like at the site that I work at Coastside College in Garden Grove, I have all the students complete the basic certification. I have all them go to the advanced certification and complete that, and then they go to the military certification. So again, it increases their depth and breadth of tax knowledge. But again, if you're basic, that's fine. You certify, and then of course you only will work on a tax return that is for that basic volunteer. But again, before you take the basic, you have to complete the ethics test, the volunteer standards of conduct, and then the intake and interview. And the advance is it's a little bit I don't want to use the word challenging because again, you can look up the answers. It's all self-paced and you get all the time in the world, but it's a little bit more involved. And obviously, if you are at the advanced certification, then you're able to handle just about any return that walks through the door. Another one, and if you're not a tax professional, you can simply ignore this. This is the federal tax law update for professionals. And as I tell my professional brothers and sisters, if you're going to volunteer in VITA, you can take that Circular 230 certification, but I highly recommend you go through basic and advanced because as a tax person, sometimes you're not touching these issues on a regular basis. And again, I've had some of my fellow my fellow enrolled agents try to take the basic or the advanced without studying, and they failed it. And so yeah, so you want to study. Foreign student, we don't do it at the St. Killian's VITA site. That's for your international students. That is probably one of the more challenging certifications, not impossible, but it's a little challenging. And then we have the international module, which we don't do at the VITA site at St. Killian's. And then the military certification. The military certification allows taxpayers who come in with a Schedule E as an echo for rental property will help them with those. But again, the volunteer has to be certified at the military level. And Sean, I don't think we had any folks last year who were certified military at the church. I don't think we did.
We had two.
Did you help people? Did you help taxpayers with their military returns?
No, but the two who do that also work at other sites.
Okay. Okay. And again, a lot of people get intimidated with the military return. They're wage earners, just like most of us, and it's not super complicated. And there's material out there in the publication 4012 and also in the IRS publication 3 talking about military provisions. Puerto Rico, we don't do that. If someone says, well, I got a Puerto Rico return I need done, the answer would be you need to go to a site that does Puerto Rican returns. And the closest one I can think of is a Camp Pendleton. That's a Marine base down in San Diego County. And then the site coordinator, very few of you will go through site coordinator training, but sometimes you may be designated as an assistant site coordinator. And if that's the case, there's reading material to prepare for this certification. And then once you're certified, then you're able to be a site coordinator. So for example, at my site, I'm the site coordinator, and I usually have 2 assistant site coordinators who take the site coordinator test. So if one of us is gone, someone else can fill the shoes. And so again, that's another certification. All right. So again, new colors, new shapes, things have changed. And then the certification, you can see right here, once you start taking the certifications, this number right here, right now it's 2. I was playing with this yesterday, and I think this came online Thursday. And so I'm certified at the volunteer standards of conduct and the intake and interview. And so that's what's going to happen here. And then the volunteer agreement, this is the document that you're going to share with your site coordinator. And as it says right here, you'll sign it, which means as you take the certification, it will automatically populate the 13615. And then when you sign it electronically, then you're able to print it out, or maybe you're going to put it in some type of electronic version and then share that with your site coordinator. But again, new colors, new shapes, and I think for the better. But I guess we'll find out. Let's see, Sean, I can't think of anything else here. You already mentioned if students are having difficulties, we don't share the answers with them, but we'll direct them to where to go to study the material. Is that a fair statement?
That is exactly this correct statement. And then I had a couple people contact me because they wanted to know the site ID number, and that indicated to me that they were trying to sign in not to the test lab, but to the real tax slayer program. And that's not going to work right now. We don't activate the tax slayer program for the church until January, because we don't want you getting into the real tax slayer and filling out a tax return when you think you're just doing training.
Yeah, and that's a good point. The live tax slayer program, the live tax preparation, that software is shared with you later, not at this point. Your goal right now is to certify whatever level you're going to certify at, and then get that 13615 to your site coordinator so you are ready to go for the season. Okay. I don't think I need to jump into any more information here. So I think what I'm going to do, I'm going to bounce back to my my PowerPoint, and let's do that and see what happens.
All right. All right, we see your PowerPoint.
All right, good. We're cooking with gas, as they say. All right. Okay, so that's the new look, if you will, and I don't think we need to talk about anything else. So again, it's that's where you go, Link and Learn certification. And if you haven't certified, you want to remember there is a due date, if you will. And Sean, can you reiterate that due date for the St. Killian volunteers?
To complete certifications,
Yes.
we will want them to be completely certified before our first dry run, which is the third week in January. So sometime around January 15th, we want you certified.
Okay. And then you'll find that with the publication 4012, and if you do look up the answers to the questions, you're going to be in great shape. And here's another thing. I'm not the smartest guy in the world, but I do teach tax law at a couple of schools. If you miss a question or two, it's not the end of the world. All you need is an 80%. I have actually taken these certification tests over the years. In fact, some of these tests I've actually written when I worked at the IRS. And every once in a while, I'll still fumble a question, but no harm, no foul. You want to get that 80%. And if you're one of those people that want 100%, you got to look up each and every question. But again, 80% is the only requirement. And then if you're taking the certification, and if you fail the first time, it is not the end of the world. It simply means that you've got to go back to your 4012. And when you take it a second time, look up every single question in your 4012 and then jot it down on the 6744, and then you can take it again and be successful. All right, let's jump into reverse mortgages. And so a lot of times you'll have individuals who will ask you about reverse mortgages. We don't give financial advice at the VITA site. That's not within our lane. But sometimes they'll come to you with documents and they say, I've got a reverse mortgage, and they want to know the tax consequences. And really the tax consequences to a reverse mortgages, there are none. Because when you borrow money, there's no tax consequence. You can borrow $5 or $5 million, and you don't have any tax consequences. There's no income, if you will. There's no gross income. It's not included income when you borrow money. If you don't pay a loan back, then there could be tax consequences. But anyway, a reverse mortgage is considered a loan. And as it says in the third item, it is not income. And so when someone comes in, you could acknowledge they've got a reverse mortgage and say, okay, it's not part of income. It's not going to go on your tax return. And I don't have a reverse mortgage. I think I know a couple people who do. And what they do is they decide they want to live in their home, and they go to a bank and they qualify for it. And then what happens is they receive, I believe it's a monthly check that they get. Essentially, it's a loan, and it's dispersed over a period of time. And then what happens is the borrower lives in their home, and then they retain title to the home. But again, they've got a loan. And of course, with most loans, eventually you have to pay them back, or you want to pay them back. So again, it's not a taxable event. It's just not a taxable event. So nothing to get excited about. Let's see. I think that's all I need to talk about. And again, be very careful when people start asking you for advice, financial advice. You're not a financial planner. And at the VITA program, we have our blinders on. We have a very limited focus. We don't advocate for taxpayers. What we do is we prepare tax returns, and then we will give them tax information. So for example, when I'm at my VITA site, someone says, Jerry, what about this? I'll fire up the computer. I'll go to the IRS website, say your question is X. Here's the answer. It's on the IRS website. or I'll go to some tax material. They ask me a question and I'll show them the tax law. And that's about as far as you want to go. Again, you don't advocate for them. I've had clients, not talking VITA clients, they want me to go ahead and represent them. And I said, no, we don't troll for business at the VITA site. We provide information. And again, we do not advocate. So don't get into that. You don't get into that lane we were advocating. That's something we simply don't do at the VITA site. Okay, the 1099-K, again, this is an information return, and a lot of information returns, you'll review them, and if they make sense, that's great. If it begs the question, then you want to ask the follow-up, what does this document represent? Because a lot of times your information returns will evidence some, or in some cases, all of the income. If it evidences some of the income, then of course it begs another question. Then what is the other document that you have that represents the other income? Or like I say, tell me the story. And the individual may say, well, I've got a 1099-K. It evidences 75% of the income that I receive from this entity. The other 25% is not evidenced on the 1099-K. Okay, then that means we're going to go ahead and report the full amount on your return. We just have to find that right tab, whether it be a Schedule C or other income. But again, you'll see a lot of these 1099-Ks, and a lot of these are for example, the food delivery services. I think sometimes you got individuals who are involved in selling things on a marketplace, and so you'll see these from time to time. But again, I'm a curious guy, and hopefully you're a curious person too. Ask questions, and if you don't understand something, just ask questions. There's no shame in it because things change, and there's a lot of terms out there, and it doesn't matter if you're an attorney or a CPA or a rocket scientist. There's just certain things you're not going to know, so you got to ask questions. And I do that with my paying clients all the time. They'll give me a document, I'll read it and say, what does this represent? I don't understand. So you're the one who lived it. You're the one who experienced it. Tell me what it is. And a lot of times they're going to share that information with you. But hopefully. Okay, the 1099-K, different information. Like I say, when you sell something on a website, you might have a payment application, something like that. But again, different reasons for a 1099-K. And again, I think the takeaway here is just remember that a 1099-K is an information return, and it may evidence all of the income they receive from that particular entity. And again, ask some follow-up questions. The 1099 MISC, this is something you're going to see a lot of, and I'm gonna slow down here because this is something that you'll see, and then you're going to do maybe some, I would call it minor research. So, for example, let's say someone has won a prize or an award of some time, and there are thousands, maybe even tens of thousands of different types of prizes and awards. So what you would do is you would get a copy of this 1099 MISC, and of course, it would beg the question, hey, what's this for? And so, for example, let's say someone goes down to a shopping mall, enters a contest, and then a month later, they're notified, hey, you won a prize. Well, typically, that's going to be a taxable event, and generally, it'll be evidenced by a 1099 MISC. And so at that point, you would go into your software, you'd go to other income, and you would indicate the individual has other income, which is subject to taxation. A lot of awards are also included in taxation. However, there's certain exceptions. Certain employment awards are an exception. And that publication 525 that we talked about is probably your go-to document for prizes and awards, but you'll see a lot of them. And again, you'll also see a lot of individuals who won a small amount in a class action lawsuit. And it depends. Again, back wages, that's something that is a fully taxable event. If someone receives other types of court awards, chances are that's going to be a non-taxable event. But again, your publication 525. And then what I've done in the past, I've seen this at my VITA site again and again. People typically give me a postcard and they'll say, I got this, and plus I got a check for $50. And I'll ask them, well, what's the nature of the court decision? And they'll say, I don't know, I got a postcard. And so there'll be an address of a law firm on the postcard. There might even be a URL for a website. There may be a telephone number. And I've reached out to these law firms before, say, hey, what's this all about? What is the nature of this particular court decision? And what's the nature of the amount? Is this back pay? Is it for intentional infliction of emotional distress? What is it for? And typically you'll get an answer. But again, you want to slow down when someone hands you a document and you're reading it and you're trying to figure out what it is. Now, what I do, and of course it depends on obviously your site coordinator. What I do at my site when people give me a document and we can't get any fidelity on it, I automatically default to, hey, it's a taxable item until we find out whether or not it's not a taxable item. Let's see, other things, that's probably the ones you're going to bump into at the VITA site, and prizes and awards, and again, court settlements, if you will. That's probably the nature of your 1099 MISC. I think we've mentioned this before. If you have someone who wins a prize and the individual then goes to, they get the 1099 MISC, maybe they've won some type of large big screen TV, and then they decide, typically about the same day, same week, they look at a retailer, they go, what is this thing selling for at a local shop? And they get the same make, model, and year. And let's say the 1099 MISC says $1,300, and the retailer says, well, $900. Then for VITA purposes, and for that matter, any purposes, you can report that fair market value, i.e., what the retailer's selling it for, that $900. And I've done that again and again. And then people will say, well, Jerry, the 1099 says this amount. And I said, well, that's fine. But federal tax law says you can report the amount the item is actually worth, and that'd be the fair market value, i.e. what a retailer's selling it for. All right, Sean, any questions before we continue?
I don't see any questions in the chat.
Okay.
Did you want to take a break here, or?
We got 9:58. This is a great time. 10 minutes?
Yeah, let's take a 10-minute break here. We'll pause the recording.
Okay, sounds good.
Oh, thanks.
All right, we are back, and we're still talking about the 1099 MISC. And so, and this is probably most likely for the new and the newer VITA volunteers. A lot of times individuals will say, well, I did not receive an information return. That means I didn't have income. That is not the case. And that's why I always refer to individuals to Internal Revenue Code Section 61, which means everything's included in gross income unless otherwise accepted. And so you'll find those exceptions. So if someone comes in and says, well, I had a little bit of income, maybe $200 or $300 of income from some type of endeavor, self-employment, but I did not get a 1099 MISC. My response is, well, you still had income, whether it's $200 or $300. And it doesn't matter if you did or did not receive an information return. I know that Section 61 means it's all included in gross income. And so we'll find a place on that software, and it could be in the self-employment section, i.e. the Schedule C or other income. But again, that's a misconception I've heard hundreds and hundreds of times. And I just tell people, you've got the tax law, and that's what we're going to refer to. Another thing that you'll see, individuals will say, well, I received some type of royalty income, and my royalty income is only $5 or $6. Well, that's going to be included in gross income, even though the individual did not receive an information return. And so we want to make sure that we address that. And then here's another thing that you'll see from time to time. Individuals will offer this information to you. People like to talk. And they'll say, well, I bartered my services. I'm an attorney, and the guy across the street, he's a dentist. So he fixed my kid's teeth, and I drew up some legal papers and some wills for him. So we exchanged services. That's called bartering. And that is a taxable event. But for the purposes of the VITA program, It's outside the scope. It's out of scope. So we don't do bartering. And then we already talked about the 1099. Some individuals are required to issue 1099s to their independent contractors. And what we do in the VITA program, will provide them information, but we don't prepare 1099 MISCs. And if someone says, why not? Oh, that's easy. We're not trained to do that. And so you'll have to go out in town, find yourself a professional tax preparer, and pay that individual to help you out with that particular topic. All right, and then another type of information return is a 1099 NEC. And this is really important because a lot of times you'll have individuals coming to the VITA site and they're engaged in some type of self-employment. Maybe they're a tutor, maybe they're a dog walker, maybe they're a locksmith, whatever they are. And a lot of times they're not given any type of information returns. Their clients pay them. Like, for example, I'm self-employed in my tax practice, and my clients don't give me anything other than maybe a Zelle payment, or sometimes they give me checks for the fees that I charge them, or sometimes they give me currency. But I don't get 1099 NECs from my individual clients. And so a lot of times you're just not going to have that. And that's why when you're asking the individual about their income sources, and that intake and interview sheet is so important, because you're going to have the taxpayer give you information that's not reflected in an information return. And probably the takeaway here is, again, we don't prepare any type of 1099s. That's outside of the scope of VITA. We just don't do it. Let's see. And then, yes, the 1099 NEC, when someone does have it, again, it's going to beg the question. This is what I do. I'll review it and I'll say, okay, it says here that you received $13,000 from this entity. And the person says, yeah, that's correct. I said, all right, in this line of work that you're in, is this all of the income that you received, this $13,000? Or did you receive more than $13,000, whether it be from this entity on the 1099 NEC or other entities? And in the accounting or the tax world, we're looking at what is called gross receipts, all of the income. And typically when you're talking to individuals, most people know usually within about $500 how much they made in a particular year. And then usually individuals will jot it down, or they'll have QuickBooks or some type of accounting for the income that they received. And that's another important thing in the VITA program, is we want to help them out. We want to make them feel comfortable. And sometimes people, they're not good at keeping records. And so we're going to ask them probing questions, if you will, trying to get them to remember what they received as part of their business. And a lot of times they're receiving monies, and those monies go directly to a bank account. So that's one way to determine the amount of their gross receipts. Okay, let's move to our credits. And so you probably have heard about the child tax credit. This has been around for a number of years. And a few years ago, it was a refundable credit, and things change. And of course, now it's a non-refundable credit. And this is calculated automatically. You're going to enter data into the software pertaining to the child's name and their social security number. And then what happens is the software will calculate whether or not the taxpayer is going to receive this child tax credit for their children. And so you can see the qualifications toward the middle and toward the bottom of the screen here. And so if someone is under 17 at the end of the year, and the tax year for our purposes is defined as December 31st, 2024. And then typically when you're working with your VITA clients, they're either going to be a United States citizen or a resident alien. And usually the resident alien, that's someone who's come to the US and they've gone through immigration and they have a green card. You will rarely see a US national. So that's something that you just won't even see in the VITA program. And then in addition to other requirements, they have to be your dependent. And typically you're talking about a minor child, son or daughter, something like that. And then, of course, this is something that we ask about, and usually we don't see. We want to determine if this qualifying child is supporting themselves, because sometimes you will have a minor child who has income and they actually are supporting themselves. And if that's the case, then the taxpayer, i.e. mom or dad, will not be able to get the child tax credit. And then another requirement, the child has to live with the taxpayer more than half of the tax year. And then, of course, at the very bottom, they got to have a Social Security number. And when you're talking about a Social Security number, it usually it depends on the card that you're looking at. Sometimes you'll see the verbiage valid for employment. And so again, you're looking for Social Security numbers. And in the VITA program, and your site coordinator will tell you this in the training also, the taxpayers, when they show up at the VITA site, they're going to have their Social Security cards, and that would be for mom and dad and all of the kids. In the event that they don't have Social Security cards, an acceptable alternative would be a Social Security document having the Social Security number on it. But again, we're looking for a Social Security number. We don't want a situation where the wrong number is inputted into the software and then the return is rejected. And when the return is rejected, what that means is it has to be perfected. And so that means someone has to spend time and energy reaching back to the taxpayer and say, hey, what is the Social Security number for this kid 1 or kid 2, something like that. So again, that's why we're looking at Social Security cards in the VITA program. And then sometimes people say, well, I lost my card, I don't have it. And what they can do is Social Security is pretty good. You can contact the local office, provide them information, and they'll be able to generate a card for you. Maybe not that day, but in short order. And then the additional child tax credit, this is what is called a refundable credit. And anytime you hear the term refundable, that simply means that they may have no tax liability, but they're going to get money back from the government. And that's what the additional child tax credit is. And this is also pretty much automatic. And this is for your low or lower income taxpayers. And it's changed. It's gone up to a maximum of $1,700 per qualifying child. And so that's a good thing for the taxpayer. And then this is something that I've seen, I don't know, 5, 6, 7 seasons where the IRS doesn't issue certain refunds before the middle of February. And so there are certain people that show up at the VITA site and the return is filed, and then they'll call a week later and say, hey, where's my refund? And we tell them, well, in some cases, you're going to have to wait for that refund because the IRS, because of various reasons, to include a lot of fraud, the IRS is not going to issue the refund until a certain period of time. And this is also another thing. Again, we do not advocate. And so when someone's calling up for a refund, this is how I do it. Your site coordinator may do it differently. I tell them we don't advocate for the client. We don't do research on the IRS website. But what we can do is we can tell you where to go. We can provide that information to you. Go to the website and do where's my refund, something like that. But do not get into the habit of trying to advocate for the client. That is going to end poorly, probably for you. So just don't do it. And then, of course, if you've got a child at home that's over 17, you might be able to get that $500 credit. And in this particular case, you can get it if you're a U.S. citizen or a resident, but you got to have a valid ID number. And this is typically not an issue with clients that come in. They're usually going to have a Social Security number, or they might have what is called an individual taxpayer identification number. And in some cases, they may have an adoption taxpayer identification number, but they're going to have something. ITINs, usually you'll see that in our program. Typically, it's going to be for undocumented individuals, and we help out undocumented individuals in the VITA program. And what you'll learn is when you have someone who's living and working in the United States, and let's say they don't have a social, but they've applied for an ITIN, and let's say they happen to be a national of, let's say El Salvador, but they've been living and working in the United States for a number of years, and they meet a particular test, and what that means is they are treated like a resident alien for tax purposes, not immigration purposes, but for tax purposes, which means they'll have a U.S. filing requirement, and they'll use the same form that you and I use, the Form 1040. So you'll see that, and we see that at my VITA site. We probably see a good 50 or 60 people who have ITINs. All right, what else do you need to know? Again, Other credit is $500, and it appears automatically on the return. I think that's about it. Okay, this is another one, and we're going to go through this before we conclude our training this morning. This is the Child and Dependent Care Credit. And this is a great credit. It's non-refundable. And when you have someone who drops off their child because that someone has to go to work, or in some cases look for work, or maybe even go to school, but nonetheless, they're dropping them off either at daycare or maybe with an individual. And if that's the case, and the child is under 13 and mom or dad are paying childcare expenses, then what happens is they being the taxpayers can calculate a credit, or you'll calculate a credit for them, and that credit is based on the amount of payment. So let's say you're paying $3,000 for their child in one particular year. That's not the amount of the credit, but that $3,000 in child care expenses is used to calculate the credit. And typically for this particular credit in the VITA program, this is going to be for minor children. Every once in a while, you'll bump into someone who's paying someone to watch their spouse. And if that's the case, then the rule is that adult has to be unable to care for themselves. So if you leave that adult in the home to go to work, something bad's going to happen to that person. And so that's why you have someone there who's caring for them. But incapable of self-care, as it says on the screen, individual who's unable to dress, clean, or feed themselves. And so you'll see that from time to time. And then there's a great publication that talks about the Child and Dependent Care Expense Credit, and that's the IRS publication 503. And then if you're newer to VITA, there are certain credits where you have a federal credit, and then the state of California has a similar credit. But again, because the state of California is a different tax entity, there's different requirements for California vice the federal return. All right. And then just a few things when you're talking about the Child and Dependent Care Credit. You're talking about expenses that are paid by the taxpayers for someone to watch their child. And if that individual who's watching the child does not have a Social Security number, the individual can still take the credit, and you'll capture the ITIN of the individual who's watching the child. And as it says on the screen here, there are certain expenses that just don't apply. And one example would be a summer camp, which says expenses for summer camp are qualifying, but an overnight camp aren't. And so you think of that situation where someone drops off their kid at Camp Snoopy for a week, and they stay overnight. They do arts and crafts. That's not going to qualify for the Child and Dependent Care Credit. Okay, and then this is another big credit. This is the Earned Income Tax Credit. And the federal government has had this credit, I think, for a better part of about 40 years. The state of California is newer to the scene. The state of California has an EITC. Again, different rules because it's a state, and that's a newer credit. It's been around, I think, about 8 or 10 years. But when you're talking about the EITC, this is for earned income. Earned income would be wages, i.e. as a W-2 wage earner, or as a self-employed individual. And if you meet certain requirements, and you're able to get this credit on your return. And typically we use the term low or moderate income taxpayers. And in the VITA program, a lot of individuals qualify for EITC. So you'll see this again and again and again. And as far as the numbers, you don't have to memorize this because obviously it's built into the software. If you make a certain amount of money, then you're going to be essentially phased out of the EITC. But most of our VITA clients are not eligible for it. But if they are eligible for it, then that income limitation at 66,000 and change, they're going to be able to meet that because. Keep in mind for the VITA program, we usually will prepare returns for individuals with $65,000 of income or less. That's the general rule. Now, are there exceptions? Yes. So if someone comes into the VITA site and they have one W-2, their W-2 is $68,000, and that's all they have, chances are your site coordinator will say, okay, we'll accept that. Now, if somebody comes into the VITA site with one W-2 and it's $120,000, that's way outside the scope, and so we won't assist an individual like that. Okay, back to the EITC again. We have earned income, and if you have children, then your credit's going to be larger. And as it says on the screen, if your kids are under 19, if they're going to school full time, then they have to be under 24. Or if you have someone who is permanently and totally disabled, then that could be it could be an adult. Now, generally in the VITA program, you're going to have individuals who receive the EITC because they have a child or multiple children. If you have someone who's single and they don't have kids, they can still get EITC. However, there's an age limitation, and the general rule is they have to be at least 25 and under 65. So you will see that for very low income individuals. And then this is something, when you bump into it, you have to explain it to the taxpayer and say, you meet all the requirements to receive EITC, but there's another requirement that you don't meet, and that's called your investment income has to be below a threshold. And for tax year 2024, it's below $11,600. So this is the definition of investment income. Think of interest income you receive from your bank account. You might even have some tax exempt interest from perhaps maybe some type of bond, government bond. You have dividend income because you are a shareholder in a corporation and you receive dividends. Or maybe you have mutual fund shares and you are receiving capital gains distribution from the mutual fund corporation. Or you might have capital assets, i.e. stock that you sold, and then you've enjoyed some type of capital gain. And so that's the definition of investment income. And so when the taxpayer, and I've had this before in the VITA site, they go, why don't I get EITC? I'm thinking, well, the reason you don't get EITC is you don't meet all the requirements, and this is one of them, investment income. And then other rules include you have to have a valid Social Security number, and that's usually not an issue. You have to be a U.S. citizen or a resident alien. And then we don't worry about this in VITA, but one of the rules is the Form 2555. That's foreign earned income. And we don't prepare that for taxpayers unless you are certified on the international module. But again, they cannot have the 2555 and be qualified for EITC. And then at the very bottom of the screen, it says the due diligence worksheet is not required. And so the software that you're going to use in the VITA program is a little different, not a lot different, but a little different than the TaxSlayer Pro software that professionals use in their tax business. And so the due diligence worksheet is included for tax professionals in their software, but not for VITA volunteers. But again, this is one of the biggest credits that you'll see, and you'll see individuals very happy with the very large refund. And then what happens is when they do qualify, the taxpayers qualify for EITC. On the federal side of the house, a lot of times they qualify for EITC for California. And so their refund could be, in some cases, upwards of $10,000 if they're in that particular zone. And so this is a big deal for a lot of VITA clients. So obviously we want to get it right. Okay, Sean, I'm going to hesitate if anybody has any questions or comments.
Yeah, Jerry, it looks like we have one question about the new Link Learn certification.
Okay.
The question is, does the new Link Learn certification only 2 and 4 tests? And for practice, we still use. So I'm pretty sure the new Link Learn includes all the learning modules as well as the certification. So
correct. The Link and Learn program for tax year 2024, it is what we would call the full boat. It's got everything.
Yep. So those training modules up there are totally optional, but if you want to go more in depth than we do on these little video sessions, there's plenty of training. I don't know if I'd buy into the advertising on Lincoln Learn site about how fun and exciting they are, but that's what it says.
Yeah, it really depends on who you are. I mean, the way I do business and and I'm not saying this is the best way to do it, just the way I do it. I will typically utilize that publication 4012. That's my go-to document. And so when I go through the certification, I will review a little bit of the reference material, but typically I'll just look at the answers in the 4012. But again, if you're newer, it's good to get that depth and breadth of knowledge, reading all the material as you can, as much as you can, and so you can start to get a good appreciation of the tax law.
Yeah, and as
All
we
right, Sean,
saw
anything
about it,
else?
we saw half an hour ago. Sometimes the answer's in the 4012, but it's not that easy to find. So it doesn't
No, it's
hurt to
not.
go
And you know,
through.
here's another thing. I'm of the opinion when you're sitting in the VITA site, again, and I'll boast about St. Killian. There's a lot of sharp preparers at St. Killian's. A lot of folks have been there for many years, and so they really know what they're doing. And so if you're there and you simply don't know and you can't find it in 4012, there is a guy or a gal probably right next to you that knows this and they've done it before. And so you can ask them, your site coordinator is going to be knowledgeable. So you always have people there. And then there's also a hotline for VITA. And so there's a way to find the answer typically in short order.
Yeah. And I'll just I'll double up on what you said. You mentioned earlier that a lot of sites don't have a lot of professionals. When I was site coordinator at St. Killian last year, I had to do continuing education forms for 18 people. So we had 18 professionals working there, plus 4 IRS employees. So there's a wealth of expertise there that you're not going to find a lot of places.
You know, absolutely. And at our site, Coastline College, I remember last year I was trying to figure stuff out, and I actually went to. In fact, I'll invoke her name. This is a compliment. I think we have Nancy Lyman on the call. She is very knowledgeable. She worked at our site last year, and she was able to find answers very quickly. So you got the expertise. You got the people who are willing and able to find the answer for you. Okay. All right, let's jump into education credits. Since when we talk about education credits, this is a big thing that you're going to see because a lot of young individuals either go to college part-time or full-time, and you have individuals who are working who also go to college. And so they'll come to the site and they'll have an information return called a 1098T as in Tango, and that's a tuition statement that's issued to them by the school that they attend, whether it be a community college or whether it be a four-year university. And this is important. There's all sorts of learning environments out there. And when you're talking about the education credit on your federal return, your taxpayer has to attend an eligible school. An eligible school or university or college, what that means is they're participating in the U.S. Department of Education student aid program. That would be the grants and the loans. So I'll use an example. I live in Mission Viejo, not too far from Saddleback Community College, and that particular educational institution, they participate in the grant and loan program. I also live next to or near this one place. It's a real estate school, and they train their real estate agents and real estate brokers. Well, the real estate school doesn't participate in the U.S. Department of Education. And so what that means is individuals who go to that real estate school and pay for the lessons, they cannot take the education credit on their federal return because again, they don't meet the eligibility of a university or a college that is considered eligible for the credit. But again, the 1098T is going to tell you most of the story that you need to know. And the education credits, we've got the lifetime learning credit, we got the American Opportunity Tax Credit. The American Opportunity Tax Credit has both a refundable and non-refundable component, so that's a good thing. And so let's talk about the expenses that you can take a credit for. And so when you're going to college, if you haven't gone to college before, you probably have talked to your brothers or sisters or one of your friends, and typically you have tuition. Now I'll be the first to admit, I actually teach at a college, and I think 1 year there was no tuition payment. But typically, when you go to college, community college, university, you're paying tuition. And if you're paying tuitions, you might be paying fees. And then typically you're purchasing textbooks, and then you have supplies and you have certain equipment. So that's all part of the what are called qualified educational expenses. And items that are not considered qualified educational expenses would be your student health fee. That's something that's required, I think, at most colleges. Your room and board, whether it be on campus in the dormitory or in a fraternity, or you're living in an apartment, and of course you're buying food. Board is food, and that's something that is not required. And then transportation. A lot of people have a bicycle, a scooter, a motor vehicle of some kind, and they're getting to class. That's not part of the qualified educational expenses. Now, I've heard this before too. The students will say, well, Jerry, I need to pay my room and board. I'm thinking, you do. If you don't pay room and board, then you'll be evicted and you're going to be on the street. That's true. But for the purposes of the education credit, that is not considered a qualified educational expense. And so that's not included. And then for the lifetime learning credit, which you're going to get into in just a moment, it's almost similar to the American Opportunity Credit as far as the qualified expenses. And it says right here, you can deduct for the for the lifetime learning credit, you can deduct your textbooks, supplies, and equipment. However, it has to be paid to the school as a condition of enrollment. And one quick example I can think of is, let's say you're going to dental school. Certain dental schools, you pay a tuition, and that tuition includes certain textbooks that you're going to receive, certain supplies that you're going to use up, and certain equipment that you're going to use up. And so again, that's the differentiation between the lifetime learning credit and the American Opportunity Tax Credit. Now, this is an important thing, especially if you are new or newer to VITA. When individuals come to the VITA site with a 1098-T, they're going to give you that document, and then you're going to ask them questions. Does this 1098-T evidence all of your out-of-pocket expenses for tuition fees and textbooks? And a lot of times your taxpayer will say, well, no, it shows the tuition that I paid. It does not show the textbooks that I purchased for my classes. And of course, you'll ask them, okay, your textbooks, how much did you pay for them? And then you'll add that as part of the qualifying education expenses. And that's usually the typical question you'll ask them. And we're not auditors. If someone shows me, and this has happened hundreds of times, they'll pull out some type of electronic device and they'll say, Jerry, here's the list of all the textbooks I purchased and the cost of the textbooks. And I'll make a note on the intake sheet. Okay, you spent $900 for books for this particular year. We're going to add the textbook amount to your tuition, your out-of-pocket expenses. And that would be your qualified education expenses. Let's see, another takeaway. Individuals will pay a certain amount, and then what happens is the credit is based on that amount. So if someone says, well, I spent $9,000 in tuition, okay, that's not the credit. The credit is calculated based on the amount that you pay. And of course, that's something that's reflected on the document that you're going to print out with the tax return. The lifetime learning credit, it's a little less generous, if you will, when it comes to the credit, and it is a non-refundable credit. Okay, for the American Opportunity Tax Credit, if you actually get into the publication 4012, and then of course there's also a great publication, and I highly recommend you at least be familiar with it. It's an IRS publication 970. And that's education benefits. But in some cases, a graduate student, first-year graduate student, may qualify for the American Opportunity Tax Credit. And so you want to jump into the 970 for that. But generally, you're talking about undergraduates. We usually use the term freshman, sophomore, junior, and senior. And one thing about the American Opportunity Credit, it's good for 4 tax years. And after 4 tax years, you've used it up, and now you're no longer eligible for AOTC. You've got to go to that lifetime learning credit. And those 4 years do not have to be consecutive. You might have someone who goes to college for a couple years, they drop out, they come back in a couple years. But again, 4 tax years for AOTC. That's when you can claim it. And then other rules include you have to be half-time. And one thing about this is pretty easy breezy, if you will, because the college or the university, the school determines whether or not you're more than half-time or less than half-time. And the school also determines the academic period. And usually when you talk about academic periods, you may be talking about trimesters, semesters. I remember when I went to college, we had an academic period that was 3 weeks long. And so colleges are like people, they're all different. And so again, you have to be at least half-time for at least one academic period. And then here's another thing, and we have to ask it, and I really don't know the genesis behind this, but the law says you can't have any felony drug convictions. And so that's a question we ask. It might be kind of sensitive, but we got to ask it. And then, of course, there are phase outs, and this is something you'll see in the tax world. There's certain things that you cannot get because Congress says you make too much money. And this phase out for the American Opportunity Tax Credit, you don't need to worry about that because it's above the income limits for VITA. The Lifetime Learning Credit, same concept. We want to get that 1098T as in Tango. And this is for just anybody who's going to college and they're not eligible for the American Opportunity Tax Credit. And typically people go to college, they go to college to either acquire or improve some type of skills, job skills. So maybe you're taking an English class or you're taking a QuickBooks class. And so what you're doing, you're acquiring or improving your skills. And as the name applies, until Congress changes their mind, this is available for an unlimited number of years. And what it is everybody's on the tax return. So let's say you've got no one's eligible for the American Opportunity Tax Credit. And so this Lifetime Learning Credit, there's a maximum for the tax return, if you will. And so again, that particular credit is taken if you're not eligible for the American Opportunity Tax Credit. And there is a phase out. There are many different types of phase out, and phase out is above that VITA limit. You'll hear the VITA income limit again and again. It's written in jello. It's not written in marble. It's about $65,000, and I think the Orange County United Way mentioned in some cases for certain returns that are very basic, i.e. wage earners, I think it can go all the way up to $80,000. That's something your site coordinator will work with the United Way with. Okay, a couple things. We mentioned this before, and this is something for usually you bump into a young adult, and young adults, there's certain things they're really good at, like IT stuff, and other things they just don't know because they're not initiated. They haven't explored the world a whole lot. And so young adults, some of them are just, they don't know about self-employment tax. Self-employment tax is for someone who is self-employed. They'll have that Schedule C as in Charlie. And then what happens is they're going to report their income and their expenses on their Schedule C. And then what happens is the software will automatically generate self-employment tax if they have self-employment of $400 or more. That's the general rule. And that will be an additional tax. And this is the way I like to describe it. When you're talking about a U.S. tax return, the Form 1040, there are many different types of taxes that are reported on the Form 1040. We typically work with individual income tax, but there's different types of taxes, and this is a different type of tax. And so for young adults, I remember many times young adults would say, Jerry, what's this? And I explained it to them. I said, this is another type of tax. You got to pay it. It's basically Social Security tax. And so what that means is you pay into it. And then if you're eligible for Social Security, when you become a senior citizen, then you can sign up for it. But again, this is something you'll see a lot of on those Schedule Cs. And it could be, again, the dog walker, it could be the tutor, and maybe they've got $10,000 of net income. They're going to be paying self-employment tax, and they might even pay individual income tax. FICA, we do see this, and again, I just want to remind everybody when you're talking to taxpayers about income, you tell yourself that everything is included in gross income unless otherwise excluded. Well, when you have someone who's receiving tips, whether they receive $1 in tips or they receive $100,000 in tips, tips are included in gross income. And then this is another thing. Sometimes individuals receive tips and they're not reporting it to their employers. And that happens all the time. And what that means is if the individual has to report their Social Security because they didn't report it to their employers, then they'll fill out an IRS form 4137. And this is within scope of the VITA program. So you'll see this from time to time. So when I'm talking to individuals and they're engaged in some type of work and they're receiving tip, I ask them, tell me about your income and where are your tips reflected? Are they reflected in the information return that you received? Are they reflected in your gross receipts where they reflect? Because tips are included in gross income. And this is something that we see at our VITA site. You'll probably see it at your site where individuals will come in and you are looking at their income of a certain amount, and everybody has living expenses. And let's say the individual has no non-taxable sources of income. We do the quick math and say, wait a second, how are you living in Orange County, California? And I've heard this a lot. They go, well, it's not easy. I'm thinking, well, hold on a second. I'm a trained accountant. That means that's mathematically impossible. And so the example is no money in the bank. You got living expenses of 40,000, income of 25,000, and your non-taxable sources of income are zero. The delta there is $15,000. And that means something's wrong. And so what I tell people is, you know something, this is not going to fly with us at the VITA site. And so I tell my preparers, and I've done this myself, I tell people, I say, you know, I'm not going to prepare your return because you're telling me that you have $15,000 of unreported income that you don't want to fess up to. And this is not the purpose of the VITA program. We're supposed to prepare a return that is correct. We're not auditors, but you just laid out a fact pattern that doesn't make any sense. It's mathematically impossible. And so I've had this discussion with taxpayers before. I said, look, again, I'm not an auditor, at least I'm not an auditor anymore. But if this return was filed, and if in the unlikely event that you were examined by the IRS, there'd be issues that you would have. And so this is something where, and you'll see this in the VITA site, you'll feel uncomfortable about preparing a particular return for various reasons. Go to your site coordinator and get them involved. But again, you will see this where people say, well, I want my return done. I'm going to report only this amount of income. And you ask a few questions and you're just shaking your head and say, no, this doesn't make any sense. And I think it's really important. You want to be empathetic with your taxpayer, your client. I think you want to help them. But at the end of the day, you got to look them in the eyeballs and say, you know something, this doesn't make any sense. And I'll tell you why it doesn't make any sense. And then once you lay that out to them, a lot of times people say, yeah, you're right. I probably do have more income. And the answer would be, based on this fact pattern on the screen right now, the answer is yes, you do have more income. So let's report it. That's the bottom line. Let's report what you make. Sean, any questions or comments?
No, there's no questions right now. Somebody was asking about practice exams, but I pointed her to that.
Practice exam?
Well, there's at the end of the different learning modules, they have little questions and answer things.
Oh, yeah. Yeah. You know, another thing when you're talking about link and learn, when you get into the practice lab, you're going to see practice returns where you can go ahead and take a stab at it. And they also have check figures. So that's another way. Okay.
I do have a question.
Who's that?
This is Al Dillingham.
Al?
On the educational program, is it automatic to have for the 1099Q? We have a distribution from the 529 plan.
It's what automatic?
You say it is automatic.
Can you restate your question? I didn't understand it.
The program that we're using, does it automatically take care of a 1099Q, which talks about distribution from a 529 plan?
You know, I can't remember that. I'd probably give you false information. So, Sean, can you jot that down? We can we can look it up and then provide a detailed answer next week.
Yeah, we'll look it up. Now, there's another question in the from Alicia about our life insurance payments, potential non-reported income.
Ooh, she stole my thunder. We're going to talk about that very shortly.
Okay. After the break.
Yeah, talk about that after the break, and let's see what time we got here. Okay, well, in a little bit here, we'll take it at about 10 minutes. Okay, let's jump into another topic, and you see this, and this gets very emotional for certain individuals, whether they are 25 years of age or 55 years of age. Individuals have what is called a lot of them have a tax deferred program like a 401k or a 403b or a 414 or a 457. Those are tax deferred programs. And what that means is when you have tax deferral, you are going to pay income tax on that when you start taking distributions. And if you take a distribution early, Congress says you're going to pay a penalty of 10%. You're going to pay the income tax on the distribution, and then you're going to pay a penalty of 10%. That starts adding up. And then when you're talking about the state of California, you're going to pay income tax on the distribution and a 2.5% penalty. And so this becomes very expensive. This is calculated automatically by the software. And this is what is called the general rule. And we mentioned this, I think, the first week we met. In the tax world, you have general rules, and then you have many exceptions to the general rule. And so the general rule is if your client, your VITA client is under age 59 and a half, and they take that early distribution, they're going to get penalized the 10%, the 2.5%, and they will pay income tax on the distribution. And then when you talk about exceptions, there are different exceptions. And one is if you're disabled, you're taking the money out because you got some type of medical expense, or maybe you're going to college, or maybe a first home purchase. And so there's a ways to avoid either some or all of the penalty, but not the distribution. If you take a distribution, it's a taxable event because you protected it. It was been deferred for a few years. But again, the distribution is taxable. Okay, this is something that you'll see once in a while. It's called a step up in basis. And as it says right here, it's a readjustment of the value of appreciated assets upon inheritance. So when you talk about an inheritance, when someone inherits something, they can inherit a house, they can inherit a bank account with $1 million in it. They can inherit a 401k. When you inherit something, there's no tax consequence. Now, if you inherit a house and then you convert it to a rental, then your rental income is going to be taxable. If you inherit a 401k, it's not taxable. But when you start taking distributions from the 401k as the beneficiary, then that's going to be a taxable event. And so let's look at the example here. We've got Ricardo. He inherited stock when his father passed away. And the father purchased the stock approximately 20 years ago for $16K. Well, the fair market value at the father's passing was $96K. The basis for the son is $96K. And again, that's the concept known as step up in basis. And you may see this from time to time at the VITA site. And you go back to the discussion we had when we were talking about capital assets. Okay, this may answer the insurance question. I have little to no experience in insurance. I mean, I've got insurance, but I've never sold it. But when you have life insurance, there's a thing called term life insurance, which means you sign up for the policy. There's no cash value. There's no savings component, if you will. And then you pass, and then what happens is the insurance payments are made to your beneficiaries. Well, when the beneficiaries get the check, there's no tax consequence. And there's another concept, and there's probably a half a dozen names for whole life. I've heard the term universal whole life, but there's a cash value. There's a savings component, if you will. Now, when you turn in that policy or surrender the policy, there may be what is called a taxable event. And what that means is you get a Form 1099-R. And then what you can do is you can dig down for the answer in the IRS Interactive Tax Assistant. And you can see that description there are life insurance proceeds taxable. In a lot of cases, it won't be. But again, when you get those situations, you get the information return, the 1099-R, you ask some questions, and then you get into that tax assistant, and that should be able to answer the questions for you. Sean, I don't know if that answers the questions regarding the question we had regarding insurance.
I believe it does. Alicia, does that answer your question?
Okay. All right,
Yep,
and
yep,
then
she says it.
Yes, it does. Sorry. I just
okay,
saw that.
good. All right, and so let's talk about this, and we'll take a break. So this is a return for, and we're going to stick with tax year 2024. And so we've got an individual who is filing head of household. And you might want to remember for head of household, this is an individual typically is either unmarried or for tax purposes considered unmarried. And if you're thinking, Jerry, what does that mean? Well, that means the last 6 months of the year, the spouse left the house, not part of the household anymore, and that would qualify Jean for tax purposes as a head of household. And of course, there's other requirements you have to pay for the upkeep of the house, and then you've got a typically a minor child. So here's her data. Here's her fact pattern, if you will. We got her date of birth. We got an address. She has a young daughter, about 4 or 5 years old, and her young daughter lived with mom for, it says 2023. And Sean, are you able to see? Let's see, we're going to do an on-the-fly change here. Can
Yep.
you see the 2024 now?
Yep.
All right, good. All right, so pen and ink change. It's 2024 we're working with. She's got a W-2 job, and she clearly meets the income limitation, 35,000. And then some of these acronyms, FTW, federal tax withheld, you'll typically see that on the W-2. SDI is a state disability insurance program from California. SDI is a tax. STW is state tax withheld. And then a lot of times when people have a W-2 job, their employer will pay their insurance, their health insurance for them. And that is the case here. And so Jean does have health insurance under the Affordable Care Act. And so what that means is she's good to go on her federal return and on her California return if we prepared one of them. We do have a Saddleback University she attends, and she did receive a 1098 T as in Tango, and she paid tuition. And probably the takeaway there when you have someone who's got education expenses, you're looking at out-of-pocket expenses. And on the 1098T, it'll show whether or not they're half-time, at least half-time, or less than half-time. And then Jean also paid a company to watch her kid, paid him $2,500, and so she can go to work. And then the last item, it talks about jury duty. And we're going to show you, I think the term is, if I remember correctly, giveth and taketh away. And so the jury duty, when she received her payment, that's the giveth part. And then the taketh away part is when she says, okay, she gave the jury duty check to her employer, which was required. And that means mechanically, step number 1, we're going to report the jury duty pay. Step number 2, we're going to have what is called an adjustment to income. The net effect will be 0. And so we'll show you how that works on the tax return after we come back from the break. But any questions regarding the fact pattern? Sean, can you see if we got any questions or comments?
There's no questions so far.
Okay. And again, if you are new or newer, usually after about 5 returns, maybe a couple more, you're going to become very comfortable with the software. And I'll be the first to recognize, any new thing, sometimes it's intimidating. Sometimes you're kind of saying, well, gee whiz, I'm not quite sure. You're surrounded by people that know what they're doing at the St. Killian's VITA site, a lot of experience. And so you're going to be able to get the help right then and there. I mean, literally, you're going to have someone sitting next to you who probably knows the answer. Okay, I think at this point then, Sean, what we'll do, I've got 11:01. Let's come back at 11:10 and run through this scenario.
Sounds good. I'll be pausing the recording.
Okay.
All right, Jerry. And we're recording.
All right, here we go. All right, before we jump into the software, just want to point out a couple of things. We do have individuals that want to go through additional training, or sometimes they want to get refresher training. Here are two opportunities for you. If you're interested in going to a class, this is an online class. It's similar to what we're doing here, but there are some differences. This is through Coastline College, and if you sign up for it, then you'll be getting a college credit, which means you got to pay for a college credit, which I think is about $46. And we do also talk about the military module in this training. The military module deals with active duty military and reserve component folks, and then also the Schedule E is an echo. And then the United Way, they have training throughout Orange County, and one place they do train at is the Irvine Valley College. These are on Saturdays, the 4th, 11th, and 18th. Start time is 9 a.m. Ending time is 4 p.m. This is face-to-face training in a computer lab, and we've had pretty good success doing that. Sometimes people want to do face-to-face where the instructor and co-instructor walks around, troops the line, if you will, and provides information. But again, just a couple of opportunities if you're interested. Okay, any questions about this, Sean, before we jump into software?
So there was one question that came in on the chat, Jerry. It was about deferred distribution penalties, asking if the California rules conform with federal rules.
The answer is no. There is no conformity because the federal rule is Internal Revenue Code Section 72T, which is a 10% penalty. State of California is under the Revenue and Taxation Code, and that's a 2.5% penalty.
Okay.
All right. Okay, very good. Let's jump into the software here. And if you're newer, I would encourage you to maybe even take some written notes. Let's go to the software. This is the practice lab, and the practice lab is where you can practice returns, prepare those returns, and then answer your questions in the link and learn. This is what you'll see on the landing page. You'll have preparing the return. These are tutorials over here on the left-hand side. And some of them go for a few minutes. Some go, I think the longest one's 11 minutes. And then if you want other returns to practice on, these practice returns also have check figures. That's an accounting term, meaning the answer for certain things, maybe taxable income, a refund amount, something like that. Okay, then we go to the big blue tab, as I say, and you open that up. And then this looks real similar to the live tax software that you'll be using at the church. And typically you'll be working with the 2024 tax return. And I do know in years past, and I think this is the case, that older returns, let's say somebody comes in with a 2023 they want done, typically that will be accommodated. And so what we're going to do, I've already entered data for our taxpayer. Let's open it up under the client search. Oh, and one more thing here. When you're in the software, whether it's the practice lab or it is the real deal, in the upper right-hand corner, you'll see change a tax year. And in this case, you have two opportunities, the 2023 or the 2024. We'll go with 2024. And then I made this mistake only about 100 times or maybe more, where I'm entering data and I realize, oops, I'm in the wrong year. So before you start, go to the upper left-hand corner and you'll see what tax year you're in. This is for tax year 2024. All right, so we're going to go ahead and open up our return. And our return is going to be Gene Arista. And we'll go through this slow enough so you get an appreciation of what you need to do as far as entry. So we're going to go ahead and start off over here where it says basic information. And when you start with filing status, probably the filing status you'll probably spend a little bit of time on because it's not difficult or complex. You just have to apply all the rules, and probably head of household is the one. And this is where you have someone who's either unmarried or for tax purposes considered unmarried, and they typically will have a minor child, and the taxpayer is paying more than 50% of support for the household. And then the other filing status is you have a decision tree in the publication 4012, but if there's any doubt, your 4012 will probably give you the answer. And usually head of household is one you'll be spending a little bit of time with. Okay, and I don't use the wizard. I mean, feel free to use the wizard. It just helps you out, an additional resource, if you will. There are many different resources. I think typically your 4012 is your go-to document. All right, we've got our data here, and this is all the information for Gene. And we do ask for Social Security cards because what happens is people will transpose numbers, and that means the return is going to be rejected when it's e-filed. So we want to get that Social Security card or a Social Security document that has the number on it. Okay, and then there's a lot of information here. Typically, you'll be checking the information regarding the presidential election campaign fund. This is an order from the taxpayer to the federal government to take money and set it aside for that particular fund. We work with taxpayers who have lost their adult children and maybe a brother or sister, something like that. And the individual, the survivor, if you will, is going to get that refund. And so we'll work with that, a deceased taxpayer. Blind taxpayer, this means the tax definition of blindness. And so when someone says that I'm blind, I ask them, do you have any sight? And if they say, no, I have no sight whatsoever, well, then that means they're blind according to the tax definition. But again, the blindness tax definition is reflected in your publication 17. All right, and we have our information address. Usually this is not an issue. Some people want a post office box, and that's fine. But usually most people, not everybody, but most people have a residential address. And then as we mentioned before, we only prepare returns for California residents. We do not prepare a non-resident return. We do not prepare a part year return. And when people say, why not? We say that's easy. That is beyond scope. We are not trained to do that. The tax world is a big, big world, and there are many, many things that we do not attend to at the VITA site because there's just a whole lot of things you got to know. All right, and then we open it up for dependents. And in this case, we've got that minor child, that little girl, and her name is Maria. And we're going to go ahead and view the input for Maria. So we have her name, we have her date of birth, and then we've captured the Social Security number from the Social Security card. And again, the ITIN is an acronym for the individual taxpayer identification number. And this is typically, not all the time, but typically for your undocumented taxpayers. And in this case, Maria is a U.S. citizen. The relationship, she's the daughter of Gene, and you can see the laundry list. Typically, it'll be son or daughter for your VITA client. And then how many months they live with mom or dad. And in this case, it's the entire year. And then down here, probably the one that you'll see a lot of taxpayers that come into the site. They have adult children, and those adult children may be 18, 19, 20, something like that. And they're attending college. And this is where you would, once you determine that information, you would check that. Okay, so we got that for our 4 or 5-year-old. And we're going to go ahead and go continue. The IRS Identity Protection PIN, this is when people have their information compromised, and what happens is they'll contact the IRS, typically online, and they're issued an IPPIN, and this means they can file their return electronically. And so you do see that from time to time at the VITA site. All right, we'll go through a few things here. We're going to start with the W-2. And again, this is your This is your income slide, if you will, a lot of different tabs. And typically, we only use maybe a couple, 2 or 3 of these tabs for our VITA clients. So we're going to start off with W-2. You can reach it by coming over here to the left-hand side and clicking on the wage statement, or clicking here where it says Form W-2, wage and tax statement. So either one. And then we're going to go ahead and open up this particular entry. I've mentioned before, if you enter data and it's so garbled and you just want it to go away, if I want this entire entry to go away for Piggly Wiggly Corporation, I would hit that red in color garbage can and it would disappear, and then I would re-enter the data. So in this case, we're going to revise it or look at it, and that's that blue pencil. Typically, you'll be working with the standard W-2. We've got all our information, and our mantra in the VITA program is going to key it as we see it. That's the general rule. And so when someone shows you a W-2 on a piece of paper or a W-2 on an electronic device, then what you'll do is you'll key it in the software as you see it. Okay, the employer information is on the left-hand side.
Excuse me,
And
Jerry.
this is for, go ahead.
Some people are asking if you can make the screen a little bigger. It's hard to read.
Okay. How about
Thank you.
that?
Yeah, thank you.
All right, got it. Okay, so now we've got our information pertaining to her wages. And again, we're going to key it as we see it. We've got federal tax withheld, and box 3, 4, 5, and 6 are auto-populated. And let's say they auto-populate and it doesn't correspond to the W-2. This is how you make the changes. Let's say it's 507. You make your change, 507. Let's see if I can make that 50 cents go away. Okay, there we go. And so again, that's auto-population based on the FICA rates for wage earners. And then the other boxes that you want to have awareness of, you've got your box 12, and these are your various codes. These codes are listed on the back of a W-2 and also in your publication 4012. You'll only usually work with code D as in Delta, and that's deferred compensation like a 401k, or Delta Delta, and that would be your health insurance premiums paid by the employer on behalf of the employee. So that's what we have, what the employer's paying. Over here, we'd key it as we see it. If the retirement plan was checked, we would check it. If it was not checked, we would leave it unchecked. Over here, not everybody pays into California SDI, and that's something that I've learned. You know, like some people tell me, well, Jerry, everybody who's a wage earner has to report their wages on their tax return, and that's not the case. There are actually some exceptions to that, but the general rule is you're going to report wages on a tax return. And for SDI, generally most people pay into SDI. I've lived in California for a very long time, and I have never paid a penny into SDI based on my various employments. So a lot of people do, but not everybody. Again, we key it as we see it. It says right here, carries to federal Schedule A, and that's because the California SDI is a tax. All right. Then we come down here to our local information, and we indicate California. Generally, box 1, that's the federal amount of wages. Box 1 will typically be the same as box 16. Sometimes you'll find an exception, but that's the general rule. So we enter that. We have a state ID number, which is different than the federal ID number. That's the employer identification number. Key it as we see it from the W-2. Our state income tax, we entered that based on the fact pattern. 18, 19, and 20 for California VITA volunteers, we don't enter any data here because there's no jurisdiction in California other than the state of California that has an individual income tax. And so 18, 19, and 20, you do not enter data for. All right, and then here's your heads up display, if you will. And if you had another W-2, you'd come over here to the upper left-hand corner and you would enter another W-2. Usually in the VITA program, maybe 2, maybe 3 W-2s because if you work a day as an employee, you're supposed to get a W-2, but typically, you know, a couple, that's probably the most you'll ever see in the VITA program. All right, then we're going to come over here and we're going to go to other income. And if you look at the fact pattern, she had other income regarding jury duty. So let's go to that. And we're going to open this up. You'll use this section of the software a lot because people will come in with the court awards, they'll have miscellaneous income, they'll have jury duty pay. So you'll see this a lot. And so we open it up. And again, probably the thing to remember when someone has a piece of data and they go, I have some income, then you want to determine if it's taxable. If it's taxable, you'll find a place somewhere in the software. So in this case, she had jury duty pay. So we enter that and then the dollar amount. Now, if you're on jury duty and you're reimbursed for your travel from your house to the courthouse, that is not considered taxable income. That's a reimbursement. Okay, so that's step one. We have to report the income. Now we're going to go to step two, where she gave her jury duty check to her employer. And so we're going to go over here to deductions. And we're going to go over here to adjustments. So if you give your jury duty check to your employer, then that's something that you can take an adjustment to income for. So we hit there. And we're going to go all the way down to the bottom. And this is a busy screen. Some of the stuff is outside the scope of VITA. A lot of it's within scope. So we go to other adjustments at the very bottom. And then we open up the other adjustments. And that'll make that a little bit bigger. And you can see the jury duty pay. And this is the second part where she gave the check to her employer. And then that would be the giveth and taketh away portion for the jury duty. Okay. And then anytime you hit continue in the program, the software is saving the data that you entered. All right. Let's go to, at this point, let's go to our education credits. And so education credits, we open up the entry. And the fact pattern said that she went to Saddleback and she paid $1,000 out of pocket and she went less than half time. So these are the questions that will be posed to you. Did she receive a 1098T? And she did. And did she receive one from tax year 2023? We're going to say no. And then this is the information from the 1098T, information regarding the school, and then the mailing address. And then down here, this is the employer identification number, and the school has one. And again, this will be reflected in the 1098T. And then this is the screen that you'll spend a little bit of time with. It talks about your out-of-pocket expenses. And so tuition paid, in this case, $1,000. Now, if the taxpayer paid money out of pocket for books, which is very common, then of course you would add the books to the amount of the tuition paid. So that's a question you'll ask. And then I've learned, I teach at a number of Southern California colleges, and I've learned that some colleges don't charge for textbooks. And so, for example, I taught at a school about a year ago, and I think they have like 20,000 students, most of them are part-time, and no one paid for textbooks for one particular year because they received a $25 million grant and it covered textbooks. So again, not everybody, but a lot of people pay for textbooks, and that's included in that tuition paid amount. And then, of course, if someone receives a grant or a scholarship, again, you'll key it as you see it from the 1098T as in Tango. Okay, so that's the 1098T. Other questions, they ask about the American Opportunity Credit or what is called the Hope Credit. And what that means is if you have someone who has used the Opportunity Credit or that Hope Credit that existed a number of years ago, and they've used it a total of 4 years for that one taxpayer, that means they're no longer eligible for using that credit. They used up that lifetime amount 4 years. So in this case, it says, has the American Opportunity Credit or the Hope Credit already been claimed? In this case, no. And then we ask about, are they enrolled at least half time? Well, the fact pattern says that Jean is enrolled less than half time. So the answer would be no. And then the next question is, did they complete 4 years of higher education? We're going to say no. Felony conviction, usually it's going to be no. And then we're going to go to our next slide. And our dashboard then tells us that Jean is eligible for the lifetime learning credit because she went to school less than half time. And it's not a big credit, but it is a credit, and this is a non-refundable credit. You hit continue. And if you had another student, let's say Jean had an adult son, an 18 or 19-year-old young man, then you would add another student there. Perhaps maybe he would get the American Opportunity Tax Credit. Okay, and then I think we've taken care of the education credit. The child care credit, we got to jump into that because she has dropped off her daughter, Maria, so Jean can go to work. And so we're going to open up this section. And this is the child and dependent care summary. And we've got the EIN. And this EIN is going to be provided to the taxpayer from in this case, it's Toddler Time. It's a company that's watching her kid. Now, of course, if you had someone who is got a practice in their house and they have a Social Security number, then that would be a Social Security number for a daycare a daycare provider. The ITIN, again, if you have an undocumented individual watching your kid, typically they'll have an ITIN, the individual taxpayer identification number, and you would enter that data there. In this case, we've got a EIN. It's for Toddler Time. And a lot of information. And this is something that I don't think you can get past the software unless you provide a phone number. So, and I think I said before, if you're dropping your kid off to someone, you know who they are, you know their phone number and their address. So you have to enter that data into the software to get the credit. All right, and then we've got other questions. It talks about the dependent. In this case, we checked Maria, and that's the only game in town. She's got the one child. And then the amount paid is $2,500. This is not the amount of the credit. This is simply used to calculate the credit. And again, this is a non-refundable credit, which is a dollar-for-dollar reduction of the tax. Okay, we're going to enter that. And if you had another provider, then you would add that information in the upper left-hand corner. All right, we're done with that. And then you got to answer some questions. In this case, it says, did you receive any dependent care benefits from the employer? The answer is no. It asks, were you unable to work because you're disabled or a student? No. And did you pay any expenses for tax year 2023 in 2024? And the answer is no. And that takes care of the child and dependent care credit. Enter that. And just kind of a quick review of the credits. There are many different types of credits, and you'll see this at the VITA side. You'll see the foreign tax credit. Now, of course, we don't complete the form 1116, but you will see the foreign tax credit from time to time. We've already talked about the education credits. You may see some energy credits. You may even see the credit for elderly disabled. I don't see this very often. I think I've seen it in the entire time I've been doing taxes, I think 2 or 3 times, but this is for very low income individuals. You may see that. And I think that's about it. Okay, let's hit continue. And we're going to show you how the earned income tax credit and the additional child tax credit spills out on the return. But before we do, let's go to a section that we will go to for every taxpayer, and this is health insurance. And in our next meeting, we're going to go through this Form 1095 Alpha. This document is issued to the taxpayers when they're in some type of health plan, if you will. And for the purposes of California, they have to be enrolled in Covered California. Covered California is one of those programs where you can get health insurance subsidized by the taxpayers. And so when we have taxpayers come to our site and they go, I'm in Covered California, then we're going to ask them, hey, where's your Form 1095 Alpha? If they don't have it, then of course we'll give them an opportunity to come back to the site. Typically, they can either get it online or maybe we'll come back next week with the 1095 Alpha. So in this case, the answer is no, she's covered at work. And then we know, because probably most of us on the call here have some type of health insurance, you can get health insurance through Medi-Cal, through Medicaid, through Medicare. You can get it by calling a broker and signing up for health insurance. You can get it through the Veterans Administration. You can get it through work. There's many ways to get health insurance. All right, and then this is a work in progress. And so if you go to the Link and Learn practice lab and start working today, you're going to see a sign like this. So California has not been uploaded. The only game in town right now is the federal return. All right, and then before we get to that, I want to show you the e-file section, and we're going to get into this in a little bit more detail, but just to show you, when you do set up a return for e-filing, you're going to be asked to go through a screen like this, and how does the individual want their refund? You can see over here to the right, you can see it shows the federal return, and that's green in color font. That's 4,758. And the refund can either be through a paper check, which is probably not the way to do business. It's very slow, and there might be an issue with someone taking the check out of your mailbox. Direct deposit is much quicker and much safer, but typically individuals will ask for direct deposit, and in some cases, maybe even a paper check. E-file means we e-file the vast majority of the returns that we file. So in this case, for instructional purposes, we'll go with a paper check. And you're going to go through various questions. This will look a little bit different, obviously, when you start preparing live VITA returns. But you'll cursor through this. You'll get through what are called the various questions. And then you're going to see a screen similar to this. And then you're going to come down to an area where it's going to ask you, is the return ready for review? We review all returns in the VITA program. So for example, when I'm at my site and I prepare a return, even though I'm the instructor and even though I'm a professional tax preparer, I still have someone review my return. 100% review. It doesn't matter how good you are, how smart you are, every return is going to be reviewed. And what we do in the review, we do find mistakes, and we want to correct those mistakes. When the return is complete, then the return is marked complete. And at that point, then our electronic return originator is going to take over, and they're going to e-file the return. Now, the good thing is the folks who set up the software for you, that could be your site coordinator, which I think right now is Mel. What happens is when the return is marked complete, you will not have permissions to electronically file. Only a few people at the site will have permissions. So you don't have to make that mistake of accidentally e-filing a return. Only the EROs are going to e-file. Okay, so at this point, we're going to save and return. And then just a couple of administrative notes. We prepared a 2024 return. The Link and Learn is a work in progress. You can see right here, and Sean, let me know if you can see the return I'm displaying.
Yeah, we can see the 2023 return.
Thank you. So this is a work in progress, and so it says 2023 here, and you're kind of scratching your head, well, why is that? Well, work in progress. But we're going to show you the PDF document that we generated from this. But before we go to that PDF document, I want to see if anybody has any questions pertaining to the entries that we made. And Sean, if
There-
you can
there's
query the crowd.
nothing in the chat, but if anybody has a question, feel free to unmute yourself and ask.
Okay. And just a reminder, if you join us for the next couple sessions, the next one is in 2 weeks and the next one is 3 weeks. We're going to spend a lot more time digging in the software, both federal and state. Okay, no questions? Okay. All right, then let's get to our PDF. And let's show you what we generated here. Okay. All right, and then Sean, can you see that where it says practice
Yep.
lab?
We can see your
Okay.
PDF.
All right, so just a couple things. What we do is let's go through this PDF, certain sections, and kind of show you what you're going to bump into. You're going to have a roll up in PDF, and this roll up gives you information pertaining to the refund. In this case, 4,728. And it shows a portion of the refund, which is earned income tax credit. It has other information pertaining to AGI. And when you hear the term AGI, adjusted gross income, it simply means total income less adjustments. That's all it is. And then it shows, in this case, the standard deduction. And a lot of our taxpayers will have the standard deduction. Okay, and we have information pertaining to the W-2 that we entered. We have a facsimile of the W-2. And most W-2s are self-explanatory. Sometimes you have to get into the instructions, but again, the mantra is we key it as we see it in the VITA program. Okay, and then this is an important document. This is what is called the 8879. And this is a document that's signed by the taxpayers to allow us to electronically file their return. And over here, it has a little bit of information. It has AGI. It'll have tax withheld and refund. And then, of course, it'll have some information pertaining to the signature. And at the end of the day, the taxpayer is responsible for the return. We'll prepare the return based on the data that they gave us. All right, here's our PDF from the 1040. Let me go ahead and display the whole thing. There we go. And you can see the administrative data at the top.
And Jerry, just on the page previous to this, you might want to mention, because a lot of people are new this year, that the way we come up with their PIN is we just put the number 1 and then the last 4 of their social.
Yeah. PIN. We generally will enter information and it's generated. Yeah. Okay. All right. Going back to our 1040 administrative data at the top, we've got our filing status, which is head of household, and then over here, and this is something that we've mentioned. You've got taxpayers, young and old, who are purchasing cryptocurrency, aka digital assets, and so we can help them if they've purchased. But if they've sold digital assets, they've disposed of them, that is outside of the scope of the VITA program. And if someone says, "Why is that?" the answer is easy. We are not trained to do that. And don't get into an argument with them. Just say, "I'm not trained to do it. We don't do it." There's a lot of things we don't do. And sometimes people will push back and you just tell them, "We're not trained to do it." And I don't know about you, but I don't want anybody doing anything for me if they're not trained. Here's your dependent, and that's Maria. And you can see right here, the child tax credit is checked. That was automatic based on income and all the information we entered. And so that's something that she's entitled to, meaning the gene. Box 1 alpha, that's going to be her wages, 35,000. Box 8, that's going to be her jury duty pay. That's the giveth part. And then her total income is her W-2 wages and her jury duty pay. And then the take it away, that's going to be the $90 that she gave back to her employer, the jury duty check. And so her AGI is $35,000. And then over here in box 12, this is going to be her standard deduction. And this is a standard deduction for most people. You can get an additional amount if you are a senior, 65 and older, or if you are blind according to the tax definition. But in this case, her standard deduction is $21,900. And so what the math is done there, her taxable income is $13,100. And then we're going to go to page 2. And on page 2, we see on line 16 her individual income tax, and that's $1,313. Now, before she pays that, if you will, there are going to be some non-refundable tax credits. They're going to gobble up that tax. And those non-refundable credits total $1,313. So it gobbles up all of her individual income tax, and her resulting total tax is 0. And so you can see we got the various credits we're going to talk about shortly. Over here, this is the federal tax withheld. And sometimes you have individuals that have withholding, sometimes they have withholding and they've made payments. You're going to see that in the VITA program, self-employed individuals making estimated tax payments. We have the earned income tax credit, and that's not the highest one, but you're going to see you're going to see the earned income tax credit on many returns. This is the additional child tax credit. This is for low income taxpayers, and this is that refundable component. And so you can see all of her payments to include her credits and her federal tax withheld come up to a little over $4,700. She has 0 total tax liability. And so the difference would be the refund. And usually the refund is going to be direct deposit to some type of account, typically a checking account. All right, let's go through the rest of this real quick. And let me see if I can get this to cooperate. There we go. All right. This is your Schedule 1. You become very familiar with this. And on the Schedule 1, we got the additional income. Here's that section for prizes and awards. And sometimes you'll have gambling winnings. And sometimes you'll have cancellation of debt. Okay, that's page 1. Then we're going to go to page 2 of the Schedule 1. These are adjustments to income. And you'll see educator expense for certain school teachers. And let's find that $90. Here's our $90. This is the adjustment to income. And again, there's a lot of different line items on the return that you're not going to attend to. Okay, here is Schedule 3. There's no Schedule 2 because there's no additional taxes. Schedule 2 would be your additional taxes like self-employment tax. Here are your various credits, your child and dependent care credit. You might remember Jean paid $2,500 for someone to watch her kid, and that was used to compute the credit, which is $625. Her education credit, she paid $1,000 to her college, and that was used to calculate the credit, which is 20%, which is $200. So that's $825 for her various credits. All right, and we're going to go down to itemized deductions. This is something you'll see about 10% of the time. Someone will come in and say, hey, I've got a home loan, I've got real estate taxes I'm paying, I've got charitable contributions, and then what we do is we'll go ahead and make entries in the Schedule A, and then typically their itemized deductions will be greater than their standard deduction. You can get either one, not both. You will spend a lot of time with charitable contributions. The good thing is a lot of our clients or VITA clients are generous, which is good, and they're helping out either the church or some other type of charity. And so you'll capture data regarding their contributions. Here's that child and dependent care expense credit. And the last time I looked, this is a credit that multimillionaires can get. It's a non-refundable credit. And again, it's based on the amount that you pay for child care. And you can see the example there where she's paying for her daughter Maria, and the company is tutor time. And there should be some numbers at the bottom. Here you go. This is where your multimillionaires can get this credit if they're paying someone to watch their kid. It says right here, there's no limit, no limit. But again, 20% for those higher income folks. And in her particular case, she's not higher income. She's lower income. She's at that 25%. And then you can see the bottom line on line 11. This is the amount of the expense credit that she gets at $625. EITC, this is your refundable credit, and you're going to see it's up to 3 children. If she had 4 children, then the credit's based on 3, but in this case, she's got the 1 child. So that's populated. And this is a busy form. But all we do is we enter the data regarding the child, date of birth, social security number. Computer does the rest, if you will. And then you can see where the information for the child tax credit is calculated. And we go to that bottom line. Now you're thinking, well, why is the child tax credit only $488? Well, the answer is because the individual had individual income tax of a little over $1,300. Only that $1,300 and change is going to be gobbled up, and so the rest of the credit, if you will, is not it's not there, or it's lost, if you will. And that's the whole definition of a non-refundable credit, a dollar for dollar reduction of the tax. And general rule is your non-refundable credits, there's no carryback or carry forward, with the exception of the foreign tax credit. All right, and then this is more busy work. Don't have to memorize that. If someone asks questions about the child tax credit or the earned income tax credit, you can just tell them that they are credits that help get the taxpayer a larger refund. Here's your education credit form. This is the 8863, which includes the American Opportunity and the Lifetime Learning Credit. You may have a taxpayer who comes to your VITA site, and they may have 2 adult children. One gets the American Opportunity Credit, one gets the Lifetime Learning Credit. And so it depends on the qualification. But in this case, we had Jean paying $1,000 for tuition, and then she is eligible for the Lifetime Learning Credit, and she gets 20% of that. And that 20% is spelled out on line 19. And this is a non-refundable credit. And let's see, I think that takes care of what we need to talk about. Again, a lot of busy things. This is the other part of that form, the 8863. And this is the data that's captured from the 1098T, as in Tango. I did have a couple taxpayers in the past. They couldn't get the 1098T, and they would go back to the school, but eventually at the end of the day, the school then would issue the 1098T to the taxpayer. Let's see, I think, and just more worksheets. Let's see if there's anything else without getting us too dizzy. This is just a roll up of the credits. And just more data. I think probably at this point making you dizzy. Okay, I think, Sean, I think that's it. Let's go back to the 1040, page 1, and see if anybody has any questions before we call it a morning. Sean, over to you.
Yeah, does anyone have questions? I see no questions in the chat.
Hey, Mike, Sean,
Yeah, Fred.
just want to make sure, after the recording, to have the new volunteer or our St. Killian volunteers stick around for any word that need to be passed to them.
Okay, so when we end the recording, if you're from St. Killian's, please stay on the line for a little bit.
Okay, and then let's see here. Let me do this then, Sean. Let me go ahead and do my last slide. And so everybody has an idea of what we're going to be doing the next time we meet. And let's see here.
Okay.
Okay, so what we'll do on December 7th, we'll meet in the morning. We'll talk about California. That should be posted for tax year 2024. We'll go through the Form 540. We'll also go through the what's called the Schedule CA. And then we'll talk about California credits. There's numerous credits there. And it will also talk about an example of the Affordable Care Act and go through an exercise. All right, Sean,
Okay.
I'll turn it back to you and that'll take care of it.
All right. Well, thanks again, Jerry, for a fun and exciting tax training. And
Thank you, Jerry.
and end the recording.
Thanks, everybody.
Thank you, Jerry.
All right, take care.